Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO and President and Founder of the Oxen Group. Please check us out at www.theoxengroup.com for all of your equity analysis and investment ideas. Today on the Oxen Group Nightly, we'll be talking about the Wednesday market wrap-up, our position in Emerson, as well as their SDS position. We'll also be talking extensively today about an S&P breakout level that we saw today. Very interesting thing you're going to pay attention to. Some of our other current positions. We'll also be taking a little bit of a look at our retail equity analytics, as well as tomorrow's forecast. And always, please check out our disclaimer at the end of the video. So the market. What a great day for us today. We started out kind of slow with light volume. Everyone's kind of like, oh, what's going to happen with the Fed? What's Bernanke going to say in his press conference? Is he going to say, oh my gosh, we got the worst inflation in the world? What's he going to say? In reality, he says basically what I think everyone expected him to say, and the market rallies off of it because it had already priced in what he was going to say, and he didn't change from that, so it was nothing big. And once he did say something, we took off. And we're going to get to that takeoff in just a second here. But I think also helping out today was we couldn't have gotten to that point in time where we had that ability to break out if it hadn't been for some strong earnings from Amazon, GE, Baker Hughes, Hess. We also saw a good report come out on durable goods. That was at 2.5%. But really what I think happened was we broke through a key level on the S&P. This is a chart from finviz.com. And there's a multiple top that's been on the S&P here. You saw here, and here, and here. Now yesterday we broke through that level, and today it was either we're going to break higher and we're going to break out, or we're going to pull back and go back below that, and it was just a temporary position above. And today we fully broke through the 135 level, and we're above that now. And now it looks like to us we're about to go to about 140, 140.10. On a big trend here. And we have an inverse head and shoulders actually. You can see you're getting there's the head, there's the shoulder, and now it's going to pop higher. And the market tried to dip, and then did dip, but then went back to the high, and then dipped back, but couldn't get back down to this low, and then broke out through the higher point. This is a very technical chart, but you can tell, you can literally see time with the market. The market breaks out right as this stock, right as we break through this 135 line. It's pretty crazy to see it happen on the SPY. And really right now that suggests to me that the S&P is going to 1400. I would be very bullish right now about the market. We've gotten great earnings from a lot of companies. We're getting good economic data. We've priced in QE2. And at this point I think, unless we have some real big global collapse here, I actually think that May might be a pretty strong month for us. I think it won't be drastic. I don't think we're going to have, this isn't going to be, pop to 1400 or anything, but I think we're going to have a gradual incline. It's going to be relatively flat, 40, 50 point days, and we're going to slowly get there. And I think we'll get there sometime in June. Okay, so the markets start off real slow. Everybody's just basically anticipating the Fed. Once the Fed announcement comes out, we pop, and then we sort of kind of chug along, and then after the Bernanke kind of press conference ends, we just take off, and during it, and we just really take off. And as I said, we broke through that key support level in the S&P. That helped the Dow, that helped the Nasdaq. One of the positions that we got in today was Emerson. We entered the stock at 59.61 today, and we saw the stock had broken out of a nice price channel, and it looked like it had a lot of potential. And the real fundamental catalyst here for Emerson is they've had about 5 rival companies or similar kind of conglomerates in the electronics and sort of the engineering section of the conglomerates really report very solid earnings. You had GE reporting really good earnings. You had Hitachi, ABB. Some of these companies all did very well with their earnings and after their earnings. And you can see that Emerson has started to really break out. The hammer that you see today is a really, really, really bullish hammer. This was originally a red day for this stock, and it broke through that and broke higher. And you can see it moved all the way back to this moving average, broke out, and then got above yesterday's close, and this is a very, very bullish technical chart. It's combined then, and what makes this a really strong position is it's combined with fundamental catalysts. You've got Emerson reporting earnings next Tuesday, with a lot of good earnings coming out from similar companies before this, and Emerson's expected to hit a 13% revenue increase their earnings per share by 20 cents. And they've had a history of meeting, or in the last, I think, 4 reports they've had 2 under, 2 above, but the aboves have been nice. And a lot of the companies that are similar to them are doing very well with their earnings, and investors are reacting very well. And the thing about Emerson is also, people say, oh, they got like a 24 PE ratio, but if you look at the sector they're in, everyone else has a 25, 26, 22 range, so they're right there with everyone else. It's not like they're overvalued or anything like that, comparatively. So I think this is a good fundamental stock. I also think the technicals are looking very strong on it, and we're looking to get first half out around 60-80, and then take another portion. I think this could go to 62 before earnings. Okay, so we also played a ProShare Ultra Short S&P 500 SDS. Now this was our hedge position. We had a bunch of buy picks out, about 5 of them out, and we took the SDS position sort of just as a nice hedge, because we saw, okay, we were right there at that key level. If we can break out, then we're gonna, all those buy picks that we had, a lot of them are gonna do very well. If we can't break out, then we're gonna go lower, and SDS would be a very nice position. It's coming. You could see it had a nice, during that mid-April sort of pullback, it did very well, and then dropped, and it's actually at a 52-week low now. But it's very much just going to follow the inverse of what the SPY does. And so if the SPY didn't break out there, it was going to definitely drop, and probably drop pretty fast. And SDS would have been a great way for us to hedge that, and some of that risk. But it did not work out, and we were stopped out at 1995. We exited Panera at the open for a 7.7% gain today. We also exited Hess at the open for a 3.5% gain. Both had solid earnings. Market did very like both those earnings. Sold off Panera throughout the day, but opened higher. We also entered a position in Weyerhaeuser yesterday. They have earnings on Friday morning. Like that position, very similar to Emerson, with a good chart, with a lot of companies that had already reported in the same sector with pretty solid earnings that had been taken well by the market, and they gained. We exited one position earlier today for 2% gain, and then also got out our second target for 3.5% gain, 2.75% overall. You add up right there, you got 3 different positions over 2.5%. Really helps you out. And those really add up very fast. You'd be surprised. We did get stopped out of a 3/4 of Baidu, and our 3/4 position in Cliff for 1.5% and 2% losses, but we were able to neutralize those pretty much with just like a Hess position, for example, and definitely gained on the day overall. Equity analytics. We're going to be releasing our manufacturing apparel equity analytics report, which is going to be featuring companies like Lululemon, Ralph Lauren, Warnaco, Hanes Brands, True Religion, Quicksilver, and a few others, Columbia Sportswear, VF Core. We finished the first 9 pages of that and released those today with the first initial price targets and the first initial 5 scores for each company based on, they get a growth score, a value score, a profitability score, a management score, and a financial health score. And Lululemon leads every category except value, and our leader in value, I believe, is G3 Apparel, G3I Apparel. But actually Warnaco is the stock that has the largest difference between its current price and our price target, and that's a position that we're definitely be looking to add to our extended value portfolio here shortly. Tomorrow's forecast, the S&P broke that key level today. It seems ready for more gains. We had lots and lots of earnings tonight, tomorrow morning. Norfolk Southern, Starbucks, Baidu, Akame Tech, many more tomorrow morning. Allstate was tonight. There's a bunch. I've got Allstate. I got all CNBC here over on the side of me. Allstate looks like they did not beat Q1 rev, but they did very well on their EPS, and the market is buying it up. Insurance companies have done very well. We also have unemployment claims and GDP tomorrow, so those also are going to help impact the market negatively or positively. A lot of stuff on the docket, but the trend seems to be that people are liking the earnings, and the companies that are able to grow revenue along with EPS have been rewarded with higher valuations. That's going to do it for today. Visit us at www.theoxengroup.com. Email us at contact@theoxengroup.com. Call us anytime. Be a part of our 70% plus accuracy.